Hi traders, welcome to this new video on the euro dollar and pound dollar. My name is Chris from Elite Currency. Let's get started. First of all though, a quick heads up that we have more videos, Nennet and I, with FXDD. Check out the FXDD YouTube channel for all of those videos as well. Let's start with the euro dollar. This is the daily chart and you can see lots of wicks. Last 2 days we saw a lot of resistance and price is not able to break through this 113.50 zone. Therefore, maybe a retracement here is likely. Price also failed to break through the 112.50, 112.70 zone. So I think that this could be a pullback for a bigger upside. Of course, if we get a daily candle close below this support zone, below 112.50, with a close near the low, as I already indicated in the previous videos, then I would change things. Then this is looking bearish, and we're probably looking at a bearish breakout towards 111 and 110. Something like this, for instance, if we get already on Monday a candle like that, that would already be a warning sign that we might get the break. But the real break, of course, is a candle like this. Wait for some flag in the lower time frame and then a continuation. That's something I already explained. Otherwise, basically, we're looking for, I think, still a pullback and a continuation higher. This pattern is still looking more like a correction, ABC, ABC, and now expecting an ABC as well. That's my view. That's my bias at this moment. What I'm looking for is price to dip, looking for a candlestick pattern here to confirm that it's a dip and retracement, and looking for a bounce basically. Candlestick patterns, a bullish candlestick that has a wick like this and a close like that near the high could confirm it. But even a lower time frame. On a 4-hour chart, although the daily candles look like dojis and indecision and resistance, you can see that it is building a bull flag chart pattern here for the moment, which is a continuation pattern. So if we get a bounce around this 113.25, maybe even 113 zone, that could be a bounce at the bottom of this bull flag. And I'm looking for a break above the bull flag. All right, so I'm looking for a break above this long-term moving average, above 113.50, above this head and shoulders pattern here. So if I get a good 4-hour candle that can close like this, that's great. That could be a trade right there, or maybe wait for a small pullback and look for a continuation higher. That's what I'm looking for on the upside as a continuation of this bull flag pattern. If price, however, makes the dip lower, if it does retrace, we'll probably see a bearish candle that can close below the 21 EMA low like this. All right, we'll see a candle like that. This could indicate some more downside pressure. So in that case, let's put a fib from this bottom to this top. And if we do get a strong candle that challenges the 50 fib will in that case probably not hold. And we'll probably get a dip down to the 61 or the 78.6 fib. Both could be bouncing spots. So I'm not that interested in trading this downside on the 4-hour chart just because price is running right into Fibonacci support pretty quickly, 15 to 40 pips, and you're already right at a potential bouncing spot. Even the 88.6 fib, of course, as well could be a head and shoulders pattern, maybe. All right, so a little bit. The right shoulder is a little bit bigger than the left shoulder, but it could be. At least it could be a support zone. So anyhow, if we get that break below the 21 EMA, not trading it, but I'm keeping an eye on 61 and these deeper fibs for a turn and some candlestick patterns to confirm that. Otherwise, this is still a bull flag, and if price moves correctively like that, it could hit the fib and bounce off the 50 fib and then still break that flag to the upside. All right, that's what I'm looking for the euro dollar. Pound dollar, we were indicating, okay, is this an ABC? Well, we thought more that it was likely to be a 5-wave pattern, this being wave 1, 2, 3, 4, 5. So I think we had 2 fibs. We had this shallow fib. In that case, it bounced off the 61-point fib. And we had this bigger fib. And then in that case, it bounced off the 38.2 fib. So whatever fib you use, basically we got to bounce at a logical spot in a certain way, and we're getting what looks like a wave 4 at this moment with this fib 1, 2, 3, 4. So we got a retracement into the 21 EMA and a break above it. So I think this is pretty much set up for continuation higher. There are 2 ways of trading it. I think is first of all a break of this trend line that could indicate the bullish breakout for a wave 5. Close near the high, so we don't have a false break. If you get that signal, if you get that trigger candle on the 4-hour chart, what I sometimes do is look on the lower time frame for a flag and then take the continuation on that time frame. So it could be an hourly chart, 30-minute, 15-minute chart. All of those could be okay for a flag pattern like this after the breakout candle. All right. Or second version is that price makes a correction like this. Let's take a look on the hourly chart. And price kind of makes a flag like that, and then starts to break above the 21 EMA again on the hourly chart. So a break on the hourly chart, a second break, this being the first break, could also be okay in my view. And perhaps thirdly, but this is the most risky, is that if price makes a zigzag like this, candlestick pattern in here, as it maybe makes a wave 1, 2 of the bigger wave 5, and then it will go up for wave 3 of that bigger wave 5. Okay, so in this case, we might get a deeper wave 2. Sorry, it's like this, wave 1, 2. And we will get like this ABC correction. So here could be another bouncing spot around 130, which is of course a psychological round level as well. So those are three options. Now I think if it breaks, by any chance, if it does break below this bottom, then well 129.50 could still be a bouncing spot. Technically it's a 50 fib. There's also the long 2 moving average. If it does break below that, well, then I would be careful with upside. I wouldn't necessarily probably trade downside right away, but I would definitely be careful at that point. Ultimately though, when we look at this daily chart, you can see that we had a very clear, strong bullish candle break above the 21 EMA. What looks like happened is that price dipped back into about halfway that candle and it found support. So it looks like it's bouncing in my view, and it seems to be following the analysis we indicated last time, A, B, C, and this is part of the wave C. All right, so I think at this moment it is following that. We're looking for a continuation up to 132, but I think it go up to 133, 132.50 and break this high basically for a higher high. That could complete wave C, and we might see some bearish reactions at those particular target levels. Oh yeah, one more thing, the euro-dollar upside target I forgot to mention is for the moment 115 I think is the main target, maybe a small pause at 114.50, and if it breaks above 115 it can go up to 117.50. That would be the main target if it breaks above 115. Of course there could be some pauses at 116, 116.50, but that would be the main target. For the pound dollar I think the target is a little bit closer at 132, 132.50, 133. All right, that's it. Thanks for joining. Was happy to be here with you. We got more analysis at elitecurrency.com. We also have a lot of guides, a lot of starting material. You can find our ECS start package on the main website. You can find our educational articles when you go to research and education. We have live analysis daily, and of course this YouTube channel. So, you know, a lot of things to discover with us. I hope you do so. In any case, wish you all great trading and talk to you soon. Cheers.